The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the January 6th terrific Tuesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes. Who knows we should always be pioneers of our future versus prisoners of our past. Hope everyone out there had a magical and magnificent Monday. I know I did. It's great to be back with you. Let's make sure that both you and I, we do everything we can to have a terrific Tuesday. Of course, the easiest way to do that is to remember that in life, things happen for us, not to us. That's right, for us, not to us. When you and I, when we can make that shift, that means we can find the good in every set of circumstances that the universe is going to throw at us. And trust me, the universe is always going to throw circumstances at us. So it's up to you and I to always find the good. There's the bull, there's the bear. Just like we'll take a look at, there's always two sides to a market. There's always two sides to a set of circumstances out there. Hey, it is Terrific Tuesday. That, of course, means I'm grateful for your presence here today. I am here to serve you. Of course, the best way to do that would be to give me a call at 877-927-6648. Internationally, you can reach out to us at 727-445-1044. Then together, you and I, we can go hunting for bulls and bears. This is Terrific Tuesday. Of course, it's Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we've got Dow Futures up about 14 points, trading out at 17,464. ES Mini up about 2, trading out at 2,000 and about 18. NASDAQ Futures up a couple points as well, trading at 4163. Russell 2000 just slightly positive. King Dollar on the move this morning, up 148 ticks, up 14 pennies, trading out at about $91.76. Goldilocks up $6. Silver is basically flat, up 3 pennies. Light sweet crude anything but flat, down 92 cents, trading out at 49.12. So it has broken through that longer term 0.786 retracement level in that $50 range. Very interesting. Natural gas is back about a penny right now, trading around 286 or so. Let's take a quick peek across the globe, see what we have going on out here. Over in Europe this morning, the DAX is up 92 points. Interesting. The FTSE down 6, so basically unchanged there. Over in Asia last night, you had a flat Shanghai. You had a Hang Seng off 1%, down 235, and the Nikkei off 525 points, down 3%. So we'll take a look at those. I know that what everybody wants to know, though, is, hey, what's going on with our markets? Where are we going? What are we doing here today? Let's go take a look at the charts. Let's go take a look at some different patterns. Let's first we'll shift back and forth between the charting tools out here. So let's first to get a gauge of where we're at. Let's take a look at the daily charts, see what kind of message is. Let's start off with the NASDAQ. Let's start off with the NQ. So here's what we know. It's the ES. You want to start off with the NQ. I wanted to start off with the NQ. I had some computer problems this morning, so I've been shifting some things around. But nonetheless, if we take a look at the NQ, we're going to look at the last set of swing points. So hopefully you're watching us on Tiger TV. If you're not, remember you can catch the archive of this show on Channel 9 out there. And what we're looking at here is we're looking at the set of swing points from December 16th. That low out there inside the daily NQ 40.80.75. That's the low we're looking at. And then we're going to take a look at the high out here from December 29th. So from low to high, we're using our retracement ruler. We like to use our Fibonacci retracement ruler. We like to use the 0.382, 0.618, 0.786. Some folks like to use the 50% level. Hey, use whatever is going to work for you. I like to use these 3 levels out here. What we can see right now is that prices below the 0.618 area, 41.7291. If the lows are going to be taken out from yesterday, and I say if, we'll go take a look at some charts out here. If they're going to be taken out, what you're likely to see is a test of at least the 41.32 level. So you're at 41.63. That could be another 31 points or so from where we're trading right now to the downside. What else do we know in taking a look at this chart? Well, number one, December 16th is the swing point out there for us to look at. The high is 41.89. We are not trading at 41.89. We are trading inside that swing point. So the daily chart message is when you trade inside a swing point, volume or not, in this case here it's light volume, what that says to us is that you can still go down and test the lows. So levels, floor levels to be looking at that you want to be monitoring today. 41.32.38 would be your 0.786. 41.89.75 says we're going to jettison out of that swing point and begin to move higher. And continuing to trade below or trading below 41.32, that says you go down and you test the 40.80.75. So that's what the daily chart now shows us. Now there's an interesting pattern here in that 5-hour energy drink chart pattern that we're going to take a look at. And as we look at this, what we can see here, if you're watching us on Tiger TV, I hope that you are. Number one, what we'll notice, we'll take a look at the candlesticks, because candlesticks are really what the bulls and bears do for you and I each and every day, for whatever time frame it is that we trade. They provide us with a message, and the message of the market on the 5-hour chart out here is the little hammer candle that formed. Now, this hammer candle formed, this was at 5:15, so going into the actual close yesterday. So you've got a hammer candle. That says that that low in the NQ that we looked at from yesterday, give me a moment here, give you that low again. 41.45. 41.45 is the number out there. Is going to be muy importante. It's very, very important that that low, if it gets tested, hey, no big deal. Have we seen a move above that hammer candle? No, we have not. So we haven't seen any follow through to the upside out here. But that low is also an important low. What else have we seen on the 5-hour energy drink? Well, as we came into this 9 o'clock show, we also see a bullish engulfing candle here. This is where the body of this candle wrapped around the candle that ended at 4 o'clock this morning. Now, if we see some follow, now this next candle doesn't end until 2 p.m., so we got a long time to go. It's not until David White comes on and does the power law, or does the what's the title of his show? In any event, it's not until David White begins his show. Here's what I can tell you: power trading hour. Thank you there. What I can tell you is that if you see a close above, well, 41.52, you've got some additional follow through on that 5-hour energy drink chart out there. And that says 41.75, 41.91 become your levels of potential resistance out here. However, if we take a look at, I guess Basil is under the weather, so let's go send him some, I don't know, hopefully it's not that flu bug that's going on around there, but we'll send him some white light. We'll send him some, we'll send him the 5-hour energy drink. And if we take a look at the Chapman wave counts, this is kind of interesting as well out here. Again, this is the 5-hour chart. We'll see that as the low was being formed back here at 5:15 back on December 16th, it made its way down to a 6th wave count to the downside. That's the letter F. And if we take a look at the moves to the upside from that low out here, we'll see that the high came in at, coming into the close, nonetheless, at December 26th. It also made a 6 wave count to the upside, a F. And what we have seen down here at that hammer candle, what we also see is we see that we've gotten to that 6th series to the downside. That's on the 5-hour chart. So maybe it says, something to think about. So this hammer candle that came in here on the 5-hour chart, the 300-minute chart, and the NQ looks pretty important to me out there. Now, what does that mean? Well, I don't know. Let's go take a look at the 120-minute chart. Some of these charts here I've just had in the last few minutes of coming on the show as I got my system all rebooted and everything. Meant that I actually lost a bunch of work out there, but such is life. Now, if we take a look at the 5-hour chart, coming off of its high, I'm sorry, the 2-hour chart, the 120-minute chart out here, this is coming into the close here, oops, at the 4 p.m., that cash close, I should say. Come on, don't do that to me. That's coming in at this high out here on December 26th. I was at 43.22 out here. If we start doing our counts to the downside, so here's the message in the NASDAQ on the 2-hour chart, makes a 7th wave countdown. That makes the that makes going long pretty easy, because your stop just needs to be one tick below the low of that candle session out there. We also have one of my favorite patterns, price relative strength divergent pattern. As price moves lower, does it with less weakness in this case here. Nice little bullish engulfing candle that formed coming into the futures close at 5:15 yesterday, but no real follow through. So then we switch over and we take a look at our TAS market profiles. Those are on here as well. Now they're actually set up right now in what I'll call bullish formation out here. We've got that point of control, that light blue line closer to our support level. So this says, hey, this actually also says that what we should expect is at least a bounce here this morning. Now, is it a bounce? Is it a bottom? I don't know. I mean, there are levels that I pointed out inside my newsletter this morning so that the clients are easily able to go ahead and trade with the information. And as far as what it is that they should be looking at, if we do see a move higher, it's probably right up here into this 41.98-ish area. But at this stage here, the daily says not so fast. The daily says you got to clear that swing point that we looked at from December 16th. But the 5-hour, the 2-hour chart says we ought to see some kind of bounce here. So if we do see that bounce this morning as the cash market opens out here, should be of no surprise to you. No surprise whatsoever. And if it's a failure with these levels out here, it says to me you're going to likely go down and you're going to go test the low of that December 16th level. And that's what the NASDAQ is telling us. If we go take a look at what the message is from the Dow, let's go look at the Dow futures, and we'll do the same kind of a thing out here. In this case, though, this is kind of interesting. Well, let me try to clean up this chart. No, I don't need to clean it up at all. I'm just going to make it bigger and brighter and move it down. Yeah, so we got some bigger There we go. Some nice big candles to look at. Oh, that's a beautiful thing. Now, from the low of December 16th to the high of December 26th. So in the case of the Dow futures, it made its high December 26th. From low to high, what we will see is that the Dow made it to the 0.618 retracement level. That exact number, 17,385. It got down to 17,392. That's good enough for our type of work out here. Of course, that was coming into this wide-ranging bar on December 18th. This tells me the Dow is actually stronger than slightly stronger than the NQ out there. Now, the 17,385 level, or yesterday's low, 17,392, I believe is the number. That's going to be important because a break of that area says 17,204. Now, what the Dow futures have not done out here is they have not tested the top. They're not trading inside that December 16th level. That, by the way, is 17,367. So any close today inside 17,367, that sets up a message of moving to 17,204. That's your 0.786 retracement level, or going down and testing the low of that swing at 16,974. So what is it the 5-hour energy chart shows us out here? Well, we're going to see similar patterns, I believe. Yeah, we're going to see similar patterns to that of the NASDAQ futures. It's also in its 6th of 7th waves to the downside. Now, it did not form a hammer candle in that same trading session, and yet coming into yesterday's futures close at 5:15 out here. A great Who song, by the way. But nonetheless, so we don't have any bullish reversal signals on its chart out here. Let's go take a look at the 120-minute time frame chart for the Dow futures. Let's go see what it shows us out here. What does it show? It shows that nice move. It gives us that 7th wave down, so it gives us that potential G count. It also gives us a price relative strength divergent pattern. Nice bullish engulfing candle. We're also down at the bottom of the box area of the TAS market profiles. This says that on the 120-minute chart that hey, if we see a bounce, it should not at all be unexpected based on what it is that we are looking at. This is Steve Rhodes. This is TFN. Of course, it is Terrific Tuesday. Welcome to the show, folks. We'll be right back.
Told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go look at those international markets, see if we can garner any information out of them. Let's start off, and we'll take a look at the DAX here, trading up 92 points as we speak right now. When I take a look at the DAX chart, you know, what I clearly see, I don't know, but I see a couple different patterns out here. First off, one of the patterns that we have, I'll put the other one on here as well. Let's do this. We'll put some additional lines up here, horizontal line of resistance in the 10,333-ish range. What I also see, though, is I see this little rising price channel that it began back on October the 16th. And what we can see is yesterday price came right back down to the bottom of that price channel. Price is back above that level out here. So the DAX probably provides us with a piece of information, especially if it closes below yesterday's low. That would then say that the rising trend that it has been in has failed. Now, where would price, your price target, your first price target, excuse me, it's always going to be the swing point, the current swing point. In this case here, it's December 16th, so it would be that low of 92.19. However, if the rising price channel holds out here, that's bullish, not bearish. Now, where the DAX runs into resistance right around this 10,033 line out there, it's a horizontal line of swing points. So we'll deal with that if, in fact, it can get back up there. That's what's going on inside the DAX. And the FTSE out here, if we take a look at the FTSE, she's trading down 6 points right now. Not a big deal. Now, what it's done here this morning, FTSE actually potentially set up to form a hammer candle today. Has not done that just yet, but if it closed where its session high is right now, 64.27 or somewhere right around there, or at 64.11, you'd have a hammer candle testing the swing point low from December 16. Now, it actually tests the high of that swing point. That high is 63.31. We've seen a move down this morning into that 63.28 level, and it's rejected that. So even though it's only trading off 6 points, there was a whole lot more damage that was done this morning, well off its session lows out here. We'll see how that closes as well. So we can see those tests here of that swing point. The swing point both inside the FTSE. If we look at the Nikkei out here, remember the Nikkei kind of started, really shifted the Nikkei didn't start the Santa Claus rally, but it certainly put the energy into it because the Santa Claus rally really began October 16th, 17th. Inside the Nikkei, though, it was at October 31st morning. About, I don't know, 1, 2, 3 o'clock in the morning when they had announced, when the Japanese bank finance ministers, their version of the Federal Reserve, had announced that they were going to go ahead and do QE to the moon out there, and then the markets just simply took off topside. Now, what has taken place here is there's the October 31st candle, big wide-ranging bar. That's really not where I have my horizontal line of support. So prices come back into the first line of a support level, which is that November 4th session out here. So otherwise, we've just seen the markets kind of moving sideways inside of the Nikkei, has not broken down or anything along those lines. If we look at the Hang Seng out here, the Hang Seng off 235 points last night. What's the Hang Seng really doing? To me, it's just in a little bit of a sideways, in a sideways consolidation type mode, the top of which is 24,300, the bottom of which is 22,500. Not that big of a, even though dollar-wise, is a fairly large move here. Remember, you're dealing with something that's in the 20,000 range. And if we go from swing point low to the high out here, the high from really a couple trading sessions ago, what it's actually only done is basically made a 0.382 retracement. You're right back above that. So not a lot of damage done thus far, at least inside the Hang Seng. Inside the Shanghai out here, the Shanghai, no damage at all. It was flat last night, just up slightly out here. What the Shanghai is trying to do, it's attempting to get up to a resistance level. So its resistance level is 36.55. You're at 35.12 right now. Any close above that 36.55 level would be extremely bullish. That doesn't mean that it stops here at 36.55, but it is a natural area of resistance. If we take a look at the monthly chart, you'll more clearly see that inside of the Shanghai, and that is what it is trying to do. That's a set of swing points, in essence, that takes you back into July of 2009. So the Shanghai trying to break above that level. And if it does that, the move inside the Shanghai, you figure it's about a 1,600 point move. So you can take 3,600, add 1,600 to it, you're going to get 5,200. 5,200 is going to take you back almost to its all-time high back in October of 2007, the low, which is 57.34. I would say if we see a break of the Shanghai of this 36.55 area, that is very likely what it is that we will see. That'll bode well, at least for that marketplace. But expect 36.55 to be a resistance level. Speaking of pièce de résistance, we're going to go take a look at Goldilocks. We'll take a look at silver. We'll take a look at a number of other stocks. You got ARM Holdings trading to the downside. Zoom, XOOM, trading to the downside as well. AOL and Minerva Neurosciences to the upside. Steve Rhodes, TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
We're off to the races. We got the Dow up 29 points. Trade out at 17,531. S&P up 4, 2,024. Composite up 13 points. She's trade at 46.65. You've got gold up $6. Silver up 7 pennies. Light sweet crude back 98 cents. Trade out at 49.06. Leading the charge to the upside. Hey, one of my favorite stocks out here, Stella. No, it's Constellation Brands, who's one of the distributors of Stella. STZ is a ticker symbol, up 2.5%, up $2.20. Of course, one of my most favorite beer these days is Innis & Gunn. Have you ever had an Innis & Gunn beer out there? They've got two different flavors, if you want to call it. Beer's got flavor to it. You got to try one. Now, they're a bit expensive. A 4-pack there is like about $10 or so. Sometimes you can find them at a Whole Foods. If you do a search online, you can. It'll give you retail stores that sell it. But if you're a beer drinker and you have not had one, go try one. They're great beers out there. In any event, leading also the upside, you got the Ebix Inc. That's up 14%, up $2.28. AOL up $2. Juno Therapeutics up about $3. Salix Pharmaceuticals up a couple of bucks. Leading the charge to the downside, you got PVH Corp. PVH is off $4, down 3%. Michael Kors is trading off about $4 as well, $4.29 up, down about 6%. Genuine Parts Company, GPC, that is down $3.33. Wynn Resorts off a couple of bucks this morning. ISIS Pharmaceuticals down 2. ARM Holdings off a buck. Dow's up 44. S&P is up 5 as we speak right now. Let's go check in on the currency markets out here. What do we have that's working or not working well? What are the messages out here? You know, we took a look at messages of the markets when we looked at the daily charts of the futures contract, the 5-hour, the 2-hour charts out here. You know, the currency that tracks the U.S. stock market better than any other currency pair is the euro Japanese yen. Now, it has not stopped its move lower. Yesterday, we took a look at the 1-to-1 A to B equals CD to the downside that it had formed. Of course, it was coming in there with a wide-ranging bar. That trade has continued to the south. It's now near the 1-to-1.272 A to B equals CD to the downside. That actual price target is 141.09. The actual low we have seen here this morning, 141.38. If there's going to be any kind of reversal, significant reversal that's going to hold inside the market, you're going to see this currency pair start turning northward as well. At this stage of the game, that is not its message. If we take a look at the euro itself, the euro trading lower this morning against the U.S. dollar index. What we know about the euro, it too has made now a 1-to-1.272. It did that yesterday. A to B equals CD to the downside. It's trading lower. No reversal. Had the opportunity to create a hammer candle yesterday, but it did not. Therefore, what does that say? It says lower price inside the euro. Next step on the way down, unless we see some type of bullish reversal signal. You'd be looking at about the $1.17 level. That's your 1-to-1.618. A to B equals CD to the downside. The euro needs to clear 120.42. Needs to get above that level in order to reject these lower prices inside the weekly chart. The larger A to B equals CD to the downside. The daily chart extremely oversold as we speak right now. So moving sideways, no good. Bouncing, getting back above 120 would be very helpful for its cause in a northerly direction. If we take a look at the Great British Pound, not doing too bad here this morning, but overall, what the Great British Pound wants to do, it looks like it wants to trade lower. She wants to get down to about the $1.50 range out here. $1.50. Maybe it's going to be a little bit cheaper to go over and visit London this summer if the Great British Pound can keep moving to the downside out here. That would be nice. But the next level is 1.507 inside of its currency pair. Hard currencies out here. If we go take a look at Goldilocks, see what gold has done. You've got gold up about $6 as we speak right now. Of course, what you and I know is the key level for us to be keeping our eye on is this trend line. Is that going to be it? Is that trend line today? By the way, that trend line probably at a price point of about $12.21 or so. Any break of that trend line, that says, hey, we may have a change in trend in Goldilocks out here. Support right now, 1198 coming down and testing and holding that TAS market profile high. That would be helpful as long as it holds. But right now we got a little bit of a narrow trading range out here inside gold. But gold should be doing this morning what it should have been doing overnight is moving higher. It should have been moving much, much higher than it has right now. So for me, that says it's suspect. Of course, you say why. I say it's because, remember maybe a week or two ago when Tom and I were doing it was during the holidays, we were doing a show, and I had Tom go ahead and pull up the chart of gold priced in euros, and we took a look at that price, and we had gold in euro terms was trading in a sideways consolidation. That sideways consolidation, top of which was right around 1,000 euros. Well, we saw a break of that area yesterday. Not surprisingly, with the move down, with the lower move inside of the euros out there, my interpretation, my impression, like when you break any type of consolidation, is that trading desks around the world would see that. Well, the trading desks around the world should have seen that yesterday, and they should have begun to react to that at about 3 o'clock this morning, and they have not. That has got to make you say, something to think about, especially when we know that this trend line here has not broken. Does that mean that the move in gold is over with? No, it just means that what should have happened didn't happen. It didn't even come close to happening out here with gold being trading at 12.09. Now, it can. Now, the key is going to be, hey, if we see a reversal in the euro, and I'm not saying we're there, that's what's going to happen. But if we did see a northerly reversal in the euro, that would say on that euro chart, gold priced in euros, it would pull back into the consolidation range. It would say there was a false breakout to the upside. So I say now I'm going to shift back here because what should have happened did not happen. Should have begun happening at about 3 o'clock this morning out here. Now what I'm going to say is let's just take that euro chart, that gold and euro chart. We're going to just simply throw it out the door because the initiation move that should have occurred did not. What we want to go ahead and take a look at now is just simply that trend line inside gold. I believe that becomes that line of demarcation out here. And today that's priced out, somewhere around the, I won't know till we actually see it, 1222, 1223, 1224, somewhere right around there. And that is what's going on inside of Goldilocks. Inside of silver out here, you've got silver trading up 6 pennies as we speak. Again, not doing a whole lot really yesterday, just continuing. It's a trade sideways ever since December 16th out here. So it just consolidating into the lows. It's like somebody's got its thumb on the price of silver and for the most part gold as well out there. So let's take a look at natural gas. I did not get a chance, or I simply didn't do that yesterday. My apology there. What did I do? Get rid of the chart? Son of a gun. Well, that's okay. We'll just put a new chart up on the screen out here. Some must have hit the wrong button. But we're going to go take a look at natural gas out there. Those folks that did send me emails, I did respond back to them apologizing for not seeing those emails sooner. But what I did say was it doesn't look good to me out there when we take a look at that natural gas chart. Oops, let me do this here. I'm just trying to get it back to a set of tools so I can get it right to a style out here, which is my one radio. That's the one we want to use while I'm on the radio. There we go. So now we're going to go take a look at the current contract, or the March contract, I should say, for natural gas. Whew. That's the monthly chart. Does that look good or not? No, of course not. Does not look good at all. But let's take a look at what December did out here. Now, it's not that far off from the seasonal pattern. Remember, if we take a look at this, just to show you the seasonal pattern, give me a moment to try to open up this file. Okay, say okay. Right there, it's on a open sesame. Oh, no, I want to do the recent file. Recent. Might be radio slides. Let me see. Is it radio slides? Yeah, it's right here. So here is that seasonal chart slideshow from this current slide. Here's the seasonal chart here for natural gas out there. And inside of natural gas, it made its peak a little bit early out here. That peak, it typically comes right around December the 2nd. And it just shows you that cold weather or not, this is about an 11-year seasonal chart for natural gas. Now, look, the price of light sweet crude may be impacting the natural gas. I don't know whether. I just know that seasonally speaking, that move lower, you can see pretty significant move lower inside of natural gas. And that continues, by the way, into January. In fact, it shows that natural gas typically doesn't make some type of bottom until the February time frame. I don't have the exact date, probably right around February 3rd, 4th, 5th, something like that, and then a bit of a spike higher out there. So when we see this monthly candle here for natural gas for the month of December, really emulates what it has historically done from a seasonal perspective out there. Now, if we switch over back to the daily time frame out here, so that's so one of my responses back to folks from yesterday was, hey, I don't like what I see. Part of it was looking at the daily chart. Now, the daily chart, well, it was a combination of the seasonal pattern that we know of. It was a combination of also the daily chart. The daily chart doesn't show any kind of bullish reversal signal out here. And what it also showed here as we take a look at the March contract was price yesterday was finding resistance at that support level. Old support becomes new resistance of that TAS market profile, $3.08 out here. So what does that say? It says that natural gas ought to find its way down to about the 266 level out here unless the bulls run in. And no, when the bulls run in, we'll see it. It's pretty simple. We will see it because they can't hide. They have to form some type of bullish reversal signal out there. By the way, this Friday is the follow-up 3-hour workshop, live workshop, to my 7-week trading course. So if you've got some extra pennies, some extra dollars, some extra euros, some extra rubles, some extra shekels out there, and you want to put them to work, come join me this Friday, 3-hour workshop that'll give you access to the prior 3-hour workshop and all the patterns that I teach there, as well as all the newsletters during that 7-week process. You'll have access to me by email, voicemail, Skype, whatever it is that I need to be able to assist you with the trading patterns that we take a look at. You can come over to the homepage of tfnn.com. Over on the left-hand side, you'll see a little up and down arrow, the 7-week trading course. Click on that, and you can sign up for that right away. So natural gas looks like it wants some lower price as we speak. We'll take a look at the daily chart out there. So that's what's going on. Well, we haven't taken a look at all the commodities. Let's come back and take a look at crude oil out here. We'll go to the continuous contract. We'll go ahead and take a look at it. Of course, what's popping up on my screen right now is basically zero. Why is that? There we go. Now we've got the monthly chart out here for crude oil because I lost, darn it, because I lost that chart. I closed it down. Let me come put the quarterly out here. Quarterly is a little bit easier. So now we've got a delay. Okay, so when we take a look at the quarterly chart, was I coming down to these, the 2008? Yeah, I think I will. Let me a moment out here. If we come down to this swing point back in 2008 to the high out here in July of 2011, you can see, well, we're trading. I got gold. What the heck am I doing with gold? Well, hey, let's stay here with gold. You can see gold is trading at a critical area. As long as we got the quarterly chart up on my screen out here, 1198.10, you know, is a significant level. Any break below let's call it the low back here in October that we've got those lows at 1131. That says you'd actually see gold run down to about the 994 level out there. So I wasn't intending to pull up gold, but somehow I did out there. What does that mean? I don't know. Let's go take now a look at light sweet crude, and it's trading out at 48.95 as we speak. So here we go. Here is the quarterly chart pattern out here. Okay, so all I'm going to do is come back into the 1986. Is that what I've got out here? Why is that? What is that? Oh, I've got this other contract up on my screen. Let me see. What do I got out here? Where am I? Let me come all the way back up here. Okay, there we go. Let me come up with, so 49.05. I had a delay on that. Sorry about that. Okay, so here's where we're at. We take a look at light sweet crude. We come back to the lows out here in January 2009. What we can see is that 50.67 mark was the 0.786 retracement of that move from the lows at 33.20 to the highs at 114.83. So now that we've broken through that area, now what we're trading, now what we're really doing is trading in that quarterly swing point out here. At least that high is 54.66, and you're at 49.05. So you're inside that swing point. It's looking more likely than not that you're looking at the $33 mark out there. Pretty amazing. Let's take a look at the monthly charts out here. See if we can go find what that monthly swing point is as well. So come back, and so the monthly swing point is, wow, you're trading into the monthly swing point for light sweet crude. 50.47 is also the monthly swing point. You know, when we took a look at the quarterly as well. So that's and on a monthly basis, you did have a hammer candle that formed the month of February 2009. The high is 45.30 out there. So as long as light sweet crude continues to trade below that price point of 50.47, and remember 50.67 is the 0.786 retracement level. We're going to go back to the to that candlestick from January of 2009. That says that the lows will get tested. That says you're more likely than not to see 33 bucks, 33.20 get tested. That's unless we see some now. And when we take a look at this monthly chart, the A to B equals CD down. That too is really the message inside of light sweet crude out there. So you know you still want to. So that's the message of the monthly, the quarterly, the daily out here. The daily, what does it show us at this stage? Really nothing. You know, what we do know is light sweet crude has been moving lower with less weakness out here. But that's just, you know, that's really all that we know at this stage here. So maybe I saw, I just caught just a brief moment of David White's show yesterday while I was doing a few things. I think he posted a sign for gasoline of $1.98. You got to love that. You got to love that. Man, oh, man, that's a good thing. This is Steve Rhodes. This is TFNN. Right now, we've got the Dow. She's trading up 32 points, S&P up 3. Composite is flat. Russell 2000 is struggling here this morning. This is Steve Rhodes, TFNN. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's up 54 right now. S&P is up 6. Composite up 6 points as well. Let's check on a couple of stocks here, moving and grooving in the marketplace. CF Industries. CF is the ticker symbol, up 7%. I'm sorry, up $7, up 2.5% as we speak right now. This is the daily chart that we are showing. It's breaking above its TAS market profile resistance level, also trading into a swing point out here from October 2014, October 7th. 1.5 million shares there. You've traded 119,000 shares in the first 24 minutes of trading. 119, 300, 36, 1.8. That's trading into that swing point with a similar type volume out here. That is CF Industries. It looks like it's really been in a consolidation. If it's unable to break that swing point out here, then you got CF trading between the 290 level down to about 244, and that's the big dollar mover to the well. I take that back. We've seen some other dollar movers to the upside pop in here. You got Biogen, BIIB up 2.5%, up 847. Let's go see what it's doing on its daily chart out here. Just trading into its point of control, 345 and change out here. So this should be about where price is most comfortable trading. Just kind of been trading sideways ever since that breakout back on December the 2nd out here. If it can break about 346, 357 becomes its trading range target out there. We've got the Regeneron Pharmaceuticals, REGN is a ticker symbol, up about 1 6/10%, up $6 and change out here. It's trying to get back into bullish formation by getting above the old support level of its TAS market profile. That has acted as resistance maybe today as well. That's priced out, by the way, at 417.85. Close above 417.85. You're trading at 419 and change would suggest a change in trend. Intercept Pharmaceuticals, that's the leader to the downside, off $8 as we speak right now. This had a nice day yesterday. If Intercept Pharmaceuticals is going to pull back, it ought to find support between the 158 to 161-ish type level. Of course, it'll find some real resistance up here at the top of the downdraft from November 7th. That's at 208 to 90 out there. Big downdraft, big volume to the downside. Michael Kors out here, KORS, that's getting schnockered this morning, down about 6%, off $4 and change, gapping down with volume behind the move. I don't see any news in it. It's coming back to its most recent swing point levels out here. So in the case of Michael Kors, it made a swing point back on October 15th, along with the market. 4 million shares down there. You've done 2.8 million shares, so you're coming into that level, which it has tested once. It tested it with about similar volume, 4.2 million shares on November 11th out here. So if it breaks this area, being, let's call it about 68.25, that will not be good for Michael Kors out here. In fact, when I say not good, what does that mean? That says that it probably brings the July 2013 level into play, around $60 or so. You're trading at 68, 61 as we speak right now. Okay, so let's go back. Let's take a look at those futures contracts here for the NQ, that 120-minute chart. Let's see what we've got out here. It hasn't really moved much. Right now, it is trading. Support should be 41.51 or so. A break below that, not good. Really, a break below that level of 41.45 out there is what you really should be paying attention to. Just one tick below that would not be good for the message inside the NQ. Holding this level is fine. Expect resistance in the 4,200-ish type range out there on any kind of a significant move higher. That's what's going on inside that. Inside of the Dow futures here, real quickly, let's take a look at that. It's really not doing a whole heck of a lot out here, but certainly it has not sold off either. So, folks, if you're off to start your Tuesday, have a terrific day. As always, thanks so much for joining us here at TFNN. Stay tuned. Hour 2 of the Trader's Edge is up next. If you're off to start your day, have a great one, and I look forward to seeing you tomorrow morning. Take care.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting tfnn.com.
You're watching Tiger TV.